You own a home. When money gets tight, it's easy to feel overwhelmed, but some of the most common reactions can actually make things worse. I'm Julie Calza, leader of the CalzaCo Team, Arizona's #1 choice for VA home buyers and sellers for nearly a decade, and ranked in the top 0.005% of real estate professionals nationwide. We've helped hundreds of military and civilian families through tough financial seasons, and I've seen firsthand how small decisions early on can mean the difference between stress and stability. So let's talk about the 5 biggest mistakes homeowners make when finances get tight and how you can avoid them. Mistake number 1, avoiding the problem altogether. When you're behind on your mortgage or other payments, it's tempting to just not deal with it. You tell yourself you'll catch up next month or figure it out later. But here's the truth. Communication is your lifeline. Your lender isn't your enemy. The rep isn't there to judge you. Even if they did, it doesn't matter. They have entire departments and checklists designed to help people exactly in your situation. If you reach out before you miss a payment, you may qualify for extensions, forbearance, or temporary restructuring. That can enable you to keep your home through this hard season. Communicate. It keeps options open and shows lenders you're acting in good faith. Mistake 2, letting those house-related bills slide. When budgets get tight, homeowners often try to protect the mortgage first and still end up losing big by delaying paying things like electricity, solar, or insurance. So if you're thinking, okay, I'll just make my mortgage payment and let the other things slide, be aware these other house-related bills can have hard impacts. HOA dues, property taxes, or solar and utility bills. If you ignore them, those balances can turn into liens against your home, and that can block you from selling, refinancing, or even getting financial help later. Those bills can sometimes create legal and financial roadblocks faster than missed mortgage payments. For example, unpaid HOA can attach a lien to your property, and those liens can force a distressed sale or stop a normal sale where you're set to make money in its tracks. If you stop paying for home insurance, you'll get dropped, and if you have a mortgage, insurance is required, you could be forced to sell. The same goes for city utilities, tax assessments. They can all cloud your title and limit your options when you need flexibility most. If it comes down to prioritizing, make sure you understand which bills affect your property's ownership and which just affect comfort. If you're in a position where you prioritize house-related bills but still can't make it, call the companies. Even if it feels uncomfortable, opening the lines of communications with these places early on can help you avoid big problems later. Mistake number 3, waiting too long to sell. Selling before your default protects your credit and keeps your future options open. If financial hardship isn't temporary, say your income has changed permanently or costs have skyrocketed, selling early can protect your equity and your peace of mind. Once foreclosure is well underway, the bank starts making decisions for you, and that can follow you for years in your credit and future loan eligibility. Even if you think you'd owe money at closing, there are options like short sales or negotiated settlements that can forgive, reduce, or eliminate that gap. Yes, there are credit implications, but they're much less than foreclosure. Getting a market evaluation early doesn't mean you have to sell, it just means you're staying proactive and informed. Mistake 4, tapping the wrong credit or savings. When people get scared, they often start pulling from places that hurt them long term. Home equity lines and high interest credit are good examples. Feels like the easiest fix in the moment, but it can create a bigger financial hole that puts your home more at risk and is much harder to climb out of later. Instead, take a step back, assess the full picture. Is this a short-term dip or a long-term shift? If it's short-term, talk to your lender about temporary relief. If it's long-term, a strategic sale or restructure might save you far more than draining your savings or adding more liens to your life. Remember, panic decisions create permanent consequences. Mistake 5, choosing the wrong help. Not every real estate agent understands distressed situations. Short sales, liens, pre-foreclosures require experience and precision, especially if you have a VA loan. These transactions can move fast, and choosing someone who's learning as they go can cost you money, credit points, or even eligibility. At CalzaCo, we've guided families through these exact challenges, from short sales to military relocations under stress, helping them walk away with fewer obstacles and a clear plan forward. If you're under financial stress, you're not alone, and you still have options. The key is acting early and getting advice from someone who knows the process. You deserve clarity, stability, and peace of mind. We'll help you get there. Contact CalzaCo privately. No pressure, no judgment, and we'll walk you through your options.